Mark, always great to speak to you. You make us smarter on the markets. When you look at some of the things that we heard from the Fed and the fact that the Fed has changed and given us actually more insight into how they look at inflation, but also given themselves more flexibility, how does that actually move asset classes?
Well, I think it's been a huge stimulus over the summer. And if you look out, this combination of central bank action and all the digital trends, they point to this new normal, which has really stimulated, new normal, which is digital and a lot more stimulus in the system, and that's fueled asset prices, in particular in the tech stocks. The next question is, when do we get a little more normal? When do people get to go back into restaurants and start flying on planes? And that's really what the market is going to be focused on this fall.
So, do we ever get back to what we were in 2019, or is it just going to be a gradually, more normal? And what kind of scarring does that do to the economies, and therefore what does it mean for central banks?
Well, we will get to a more normal state. It may take the adoption of a vaccine, but those things are on the horizon. Now, whether they're 1 quarter away, 2 quarters away, 3 quarters away, 4 quarters away, that's what people are wrestling with. I think some of the things that are part of this the more normal is more normal political environment in the United States, better understanding of what is going on with the vaccine, and then some understanding of how the stimulus payments in various countries are going to play out.
Mark, where do you see the biggest opportunities? If you look at the rally and if you look at what's happening in tech, is it frothy? Is it overvalued? Or is there some room to run?
Well, over the near term, the valuations are pretty full, but it's certainly not a bubble. 25 times on a PE ratio with 17% growth is high, but it's around the range that tech has traded in. So I think having a little more optimistic picture that we're going to get more normal, I think we've started to see, and I think we're looking at opportunities for clients to take some rotation away from large cap tech, maybe move it to some other areas of tech that can see growth, whether it's the 5G build out in Asia, whether it's cybersecurity. That's one way to play it. Another is to look at the more cyclical stocks. The UK index is more cyclical, or mid caps in the United States, which haven't done as well.
Mark, are you expecting tensions to rise between the U.S. and China? I know in your monthly note, you basically say that because there's an appetite both from Democrats but also Republicans in the U.S., as we've seen with the Trump administration, to keep the fire on China. Is there a worry that actually, things will escalate and that will, move the markets quite significantly?
Well, we're not anticipating an escalation of the trade war between now and the election. So economically, I think things are going to be relatively smooth there. China has rebounded extremely well from COVID. It is a true V-shaped recovery. As far as tensions go over time, they are high, and both administrations, whatever plays out, will try to make America's points known. They may do it in different ways. So that is going to be a constant that is with us through the election and into next year.